Hey everyone, Tesla's stock price has been crashing in recent weeks and in recent years if you look back a little bit further. So in this video, I wanted to discuss a little bit about why I think Tesla's stock price is falling. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So I mentioned earlier that in recent weeks, Tesla's stock price is down from nearly $300 per share all the way down to about $200 per share. If you look back a little bit further, going back to 2022, you can see that Tesla's stock price is down even more from about $400 per share down to $200 per share. But if you go back even more, you could see the explosive stock price gains Tesla experienced in 2020 and 2021. In my opinion, the stock price should never have exploded by that much, but that was the time during the EV boom when investors were excited about anything related to electric vehicles, and Tesla was the prime beneficiary of that trend, as well as other EV stocks and other EV charging companies. So that was a little bit over excitement, over enthusiasm. Then the reality hit and the stock price came down slightly, and in recent weeks it's been falling also. So I've pulled up a chart that was created by my colleagues at the Motley Fool, really highlighting what's going on with Tesla and what happened with Tesla in the third quarter specifically that caused its stock price to fall after the quarterly results were announced. So starting with automotive sales at 18.6 billion, which were up only 4.5% year over year, only 4.5%. That's pedestrian growth for a company that's priced like a growth stock. There's a lot of growth valuation embedded in Tesla's stock price. So when it only grows 4.5% in a quarter, that alarms stock market investors because they're thinking about the longer term and what this might mean for Tesla longer term. Total revenue increased by 8.8%, mostly due to the other parts of the business that did very well. Energy and storage increased by 39.6%, services and other increased by 31.7%, and regulatory credits increased by 93.7%. Automotive leasing, however, decreased by 21.3%. Again, the core of Tesla's business is manufacturing and selling cars. That's the primary valuation embedded in Tesla's stock is manufacturing and selling cars. And so when that part of its business doesn't do well, investors start to question whether or not Tesla deserves its premium valuation, which I will talk a little bit more about later in the video about Tesla's stock price valuation compared to other car companies. Let's go on. So Tesla's automotive sales only increased by 4.5%, but at the same time, its total cost of revenue increased by 19.3% to 19.2 billion. So its costs rose more than 4 times sales for the automotive segment. Tesla's working harder to make the sales increase, even though the sales increase was modest, to be sure. Tesla increased its spending on research and development by 58.4%. That's not really bad news. That part of its quarterly update was not really bad news. Tesla is investing in its future, in its innovative technology, which I support, and I think it's something that Tesla should do because that's what investors are hoping Tesla does, is invest in their innovative technology, try to bring to fruition that driverless car technology, which is really going to boost Tesla's stock price if or when they actually deliver driverless cars. Operating expenses overall increased by 42.5% year over year to 2.4 billion. That was a big increase and more than 10 times, almost 10 times as much as automotive sales increased. So of course, all of that led Tesla's operating income to fall by 52.2% down to 1.8 billion. a big decrease. So it's not only that sales only increased by 4.5%, it's that its operating income also fell by 52.2% because Tesla was spending so much money just to deliver that mediocre sales growth. Okay, Tesla had to spend a lot more money because I know Tesla stock investors don't like to hear this, but it's because of competition. Competition is what's raising prices, raising costs of goods sold for Tesla, because now it's not only Tesla going to suppliers and saying we want this and this and this so that we can build our cars. Now there's all of the other car makers that are also going to suppliers and asking for those same materials. And so suppliers can now have better bargaining power and raise prices and say, well, if you don't want to pay Tesla, there's others that are willing to pay us these prices for our materials. And so Tesla now doesn't have as good of negotiating power with its suppliers, and you can see that reflected in its cost of goods sold. So it's not just that competition is hurting sales, but competition is also increasing costs. For those reasons, competition, I often say on my channel, I try to stay away from companies that are facing fierce competition. Tesla is one of those companies right now that's facing fierce competition. Nearly every automaker is ramping up production of electric vehicles, and they're all making plans, making investments, spending billions of dollars to increase production of electric vehicles. And at the same time, the macroeconomic environment is not working well for car makers, right? You have interest rates that are rising exponentially, which makes it more expensive for people to finance a car purchase. At the same time, those higher interest rates are decreasing overall economic activity, which is slowing down the rise in consumer income, which is making it less attractive for people to go out and upgrade their vehicles. They're saying to themselves, well, things don't look too good right now. Why don't I just keep my car for another year? Okay, and that's on top of all of the other inconveniences that come with owning an electric vehicle instead of owning a traditional car. So all of those are working against Tesla right now and bringing down its valuation. So I mentioned earlier that I would compare Tesla's stock price valuation with a host of other automakers, and here is that chart, right? So in the purple, you have Tesla's forward price to earnings ratio of 49.17. In the various other colors, I have Ford Motor Company, General Motors, Stellantis NV, and Mercedes-Benz Group. And you'll notice all of these other car makers, forward price to earnings ratio, the most expensive is Ford at 5.5. The others 4.5, 4.1, and 3.2. So Tesla's stock price is almost at least 10 times more expensive than any of these other car makers. Any of these other car makers. So Tesla's already trading at a premium valuation, which I will admit that Tesla deserves a premium valuation over these other automakers. It has earned a premium valuation because of the progress it's made in increasing revenue, while at the same time demonstrating economies in scale and increasing its profit margin, gross profit margin, operating profit margin. It has done an excellent job in that. So yes, I agree Tesla deserves a premium valuation, but does it deserve to be trading at more than 10 times some of these other automakers? That's where I start to question the valuation, and that's where I think the stock market is starting to question the valuation, and it's heading down and approaching closer to that of the other car makers. You could see the gap was the most around January of 2022 when Tesla was trading at a forward PE of over 120, and it's coming down and it's approaching that of the other car makers. I wouldn't be surprised if this gap continues to narrow because yes, Tesla deserves that premium valuation, but I don't think it should be selling at a premium of 10x or more. Something like 5 to 8x, 5 to 6, 5 to 7, that would be reasonable. That would be even stretching it, and that would be giving Tesla credit for its innovative technology, for its progress in driverless car technology, for its charging network and all of the other benefits and premiums Tesla has over the other automakers, while still making the valuation reasonable. So those are all the reasons why I think Tesla's stock price is falling. Now, hopefully Tesla can turn things around in the fourth quarter as it gets back to a normal production schedule. But before I let you go, if you've gained any value from this video, please subscribe to the channel. It'll really help me make more videos just like this one. Thank you so much for watching.